Assalamualaikum warahmatullahi wabarakatuh. Hello, my name is Salma Alisha Sahdiya with NPM 234120046 from Accounting Class 23A Accounting Audit 1 course. Here I will explain the material audit evidence and transaction test. Definition of audit evidence. Audit evidence is all the information the auditor uses to determine whether the information being audited is fairly presented in accordance with applicable criteria, such as generally accepted accounting principles. This evidence may include accounting records, supporting documentation, written confirmations, observations, or interviews, whether internal or external. Audit evidence must be relevant and reliable to support the auditor's opinion on the financial statements. Types of audit evidence. Audit evidence can be classified into several types such as documentation, invoices, contracts, and bank statements, external confirmations, third-party confirmations of receivables, observing the physical inventory process, interviews or inquiries, direct questioning of management or staff, reperforming by the auditor, and analytical procedures that compare financial data with expectations or trends. The auditor must evaluate a combination of these types of evidence to obtain reasonable assurance. Quality of audit evidence. The quality of audit evidence is determined by two main characteristics, namely its relevance and reliability. External evidence is usually considered more reliable than internal evidence because it comes from an independent third party. In addition, evidence in written or documentary form is stronger than oral evidence. The auditor must use professional judgment to evaluate the sufficiency and appropriateness of audit evidence in supporting the audit findings. Transaction test. A test of transaction is an audit procedure performed to test the effectiveness of internal controls and the accuracy of recording financial transactions. This test includes checking source documents such as sales invoices, receipts, and proof of payment, and verifying that the transactions have been recorded correctly in the journal and ledger. The purpose of a test of transaction is to ensure that financial transactions actually occurred, are recorded completely, and are at the proper value and time. Relationship between audit evidence and tests of transactions. Transaction tests are one way to collect audit evidence, especially those related to testing compliance with internal controls and the completeness and accuracy of transaction recording. Through this test, the auditor obtains evidence that supports that the company's accounting system is working properly. The more effective an entity's internal controls, the less amount and type of audit evidence needed because of the low risk of misstatement. That's all I can say about the material audit evidence and transaction test. Wassalamu alaikum warahmatullahi wabarakatuh.